Salam, TTB. Welcome to OCBC NISP's One Wealth Outlook market update for the third week of February 2022. My name is Sagara, and today I'll be bringing you our thoughts and outlook on markets domestic and global, all to help you make the best investing strategies. We're experiencing a period of significant volatility across markets and asset classes, and have been cautious of the increasing hawkishness among central banks and surprise risks that have been brought on by and outside of the pandemic. So the latest and loudest being rising inflation, further supply chain challenges, and geopolitical conflict. First, let's break down the latest economic data. Indonesia's trade surplus released earlier this week continued to rise for 21 straight months to hit over 930 million in January. So this continued surplus, combined with loosening of COVID restrictions, have and could continue to support IDR stability. The surplus amount beat economists' consensus, but shows a decrease in exports compared to previous months. Now, a slight dip, largely due to export restrictions in coal. Coal had a one-month export ban imposed in order to secure sufficient energy supply domestically. So most miners will be eligible to continue exporting again, with the understanding that they will earmark 25% of production for domestic markets. So the recent restrictions were met with great uproar internationally, but in theory help limit the rise of energy costs for Indonesian consumers. So among major commodities, coal has seen the most significant run-up, with generic coal benchmarks rising over 40% in less than 2 months. Capping prices, and taming inflation has been a continuous theme of concern for economists, central banks, and consumers. So across Europe and US, inflation has reached multi-decade highs due to unexpectedly strong bounce back in demand, and the supply chains struggling to meet that demand. As it stands, supply chains are still strained due to massive delays in Asian manufactured goods getting into the United States and Europe. So we see this from significant wait and dwell times of ships outside the 7 major US ports, as well as continuously rising commodity prices. All has served to push the Fed and other central banks to rapidly change their narrative and prepare for multiple rate hikes in the coming year. Now, on the Ukraine and Russia situation, geopolitical events tend to catch headlines, trigger market dip, or maybe even bring about greater volatility. However, 6 to 12 months forward rarely causes reversal of an underlying trend. The market may have chosen to focus on this potential conflict due to the risk that war and the following sanctions or trade restrictions may have on numerous key commodities. So Russia and Ukraine are responsible for a large share of global exports in several commodities, the most important being wheat, oil, and other energy-related products. So the risk being further inflationary pressures to consumers globally. Now, this would force central banks to take an even sharper hawkish tilt. And in equity markets, there's been a notable divergence in performance among sectors and regions. The key in this period of volatility will be finding companies with strong earnings growth and pricing power. US and Chinese tech companies continues their downtrend, as weaker than expected earnings as well as higher rates are expected to compress their outside valuation multiples. Now, on the opposite side, Indonesia's equity market has been one of the bright spots in global equities. Despite recent COVID infection numbers reaching all-time highs, the JCI has continued to climb over 4% year to date and close to breaking new record highs, currently sitting at the mid-6,800 level. Foreign inflows into equities remain strong and consistent in the past few months. Meanwhile, the MSCI Asia Pacific Index is down 3%. The S&P is down more than double that. And the Nasdaq and other Chinese equities at correction and bear market territory, respectively. Regardless, increasing central bank policy normalization across the globe and continuing inflation and geopolitical risks can lead to higher uncertainty, fear, and volatility in markets. So this may affect the inflow of funds into Indonesia later on, as well as other emerging markets. It appears sensible to position cautiously and keep a close eye on markets, especially until the March 16th Fed meeting. From us here at OCBC NISP, this has been our weekly update. To access more of our market updates and our weekly market journal, click the following link, as well as follow us by clicking the subscribe button below. Have a lovely weekend, stay safe, and remember, tidak ada yang tidak bisa.